Investment management versus financial planning. When people are looking for financial help, they immediately enter the jargon zone. In this episode, we're going to define the differences between investment management and financial planning and talk about what's really included in both so you can make the best decisions. We'll also talk about fee only versus fee based, and we'll talk a little bit about how the industry marketing machine works so that people are confused about this and what you need to do to know before you are looking for someone. My name is Bridget Sullivan-Mermel, and I'm a fee-only financial planner in Chicago, Illinois.
And I'm John Shear. I have a fee-only financial planning practice in Middleton, Wisconsin. And Bridget, before we start, I want to remind everybody to hit that subscribe button. Subscribing to our channel helps other people to find this content online. And I tell you, I'm excited to talk about this idea, and I love the jargon zone, right? Like you get into these things, and golly, we try really hard to talk in plain English to people,
Right.
and it's just hard in general. And then you've got the marketing machines, right?
Right.
All the buzzwords and all the things. And I often feel, how does a regular person make sense of these things, right? It all sounds the same, like me going into my doctor's office and the language that goes on there sometimes. So interesting, this idea of, golly, how can there be a difference, right? Some of these things, let's talk about investment planning versus financial planning.
Yeah, so investment planning versus financial planning starts with the question, what is your goal? What are you trying to accomplish? Investment management or investment advising starts with the idea, my goal is more money. Mm-hmm. Do you think that's fair to say?
I think that is. Interesting as we're thinking about this, I think about when people say, well, what do you do for a living? I say, I'm a financial planner. And they go, what's the first question? How's the market doing? Right? What do you think about the stocks today? Or,
right. And that is investment management.
Right.
So we do, as a financial planners, we do investment management.
Right.
We do. That's one of many things that we do. But if people who really just want somebody to manage their investments and never want to ask them another question about something else, investment managers are probably a good choice.
Yeah. And that's, that's the sort of marketing machine, right?
Right.
The messaging is, part of the messaging is the most important thing in our financial lives is your investments and what type of performance you get. And that's important, right? I mean, it is important, but it is not the most important thing, and it's not one of the top 2 or 3 or 4 most important things in my mind on this. But that's the message. That's what the sort of, in general, what we feel like is, financial planning. Yeah, we got to do good in our investments. And no, the idea is not doing well in investments necessarily in a vacuum. So some of the questions, we just had a new prospective client come in, and they were talking with one of the big brokerage firms. You'd recognize their name. They decided to hire them to do some things, and they're charging a percentage of their assets. And I said, well, what are they doing in financial planning for you? And yeah. And what can you tell me? What did they say when they looked at your tax return? And they didn't look at the tax return. And how about when they looked through your wills or your living trust? And they didn't look through that at all. And so we had this conversation about, golly, how much you pay in taxes is important, right? Now, how are they going to give advice? Even though it says on the big website, we do tax planning. But if you're not looking at the taxes, how do you do those things, right? If you're not looking at those things and taking that big picture, I use the term holistic a lot in my practice, and I think that may be, I'm not sure that's the right term, but it sort of pictures that whole thing, which is financial planning as I see it.
Yeah, and I think of it as comprehensive also.
Yeah.
And so, and another good important area in financial planning that we haven't talked about yet is insurance. And that's interesting because is the person looking at your home insurance and your auto insurance, or are they really just trying to get you to buy life insurance?
Right.
That is a question that I have.
Years ago, when I built the office that we have now, I had a somebody that I sort of knew, and he came. We had an open house, and he was in the financial world. And I said, oh, geez, nice to meet you. And I said, well, tell me a little bit about your business. He said, I do what you do. He says, yeah, I even look at people's insurance. And I'm thinking in my head, like, oh, you even look at their insurance. Boy, I guess you do exactly the same thing that I do not, right? You know what I mean? But that's the world that, as a financial professional, right? He was like, oh, yeah, we do the same thing. I even look at their insurance. And again, I look at how does a regular person, like, that's what the trend is, and it's changing. We're changing the dialogue with it. But financial planning starts with that question. Financial planning starts with what's the goal?
Right.
And then investments are a tool,
Right.
tax management is a tool, risk management and insurance is a tool. All those things are tools to help put the goal first. And
Yeah.
I talk about it, putting the horse in front of the cart.
Yeah, and I want to give a couple examples of what we've done recently in the last couple of years with financial planning that had nothing to do with investments that were, I felt like they were good. Like I sometimes use a baseball analogy. They were good singles. They weren't home runs, but they were good singles. Mm-hmm. The first was reviewing people's mortgages. So 2 years ago, mortgage rates were at an all-time low. Mm-hmm. And so we said, let's take a look at your mortgage and what rate do you have? Double check that. Because a lot of times people think they have something, but then they look at it and something different. Okay, go through the effort of refinancing now. Mm-hmm. Okay. 2 years later, everybody understands actually what we mean by inflation protection from getting a fixed interest 30-year mortgage. So that was one big hit.
Let me jump in on that if you don't mind with that, Bridget. The person who had this, was working with the big company, and he said, well, geez, I could go there and they can, I got a friend and they do everything for him and they can do mortgages for him, but I don't know if I need that. And I said, well, just exactly your point is, number one is identifying, does it make sense to do? The other one, and I know that you do this with people too, and it's easy for us to overlook it, is different mortgage originators, the bank, the credit union, a mortgage company charge different fees. And you think, well, wait, hang on a second. The rate is 3% or 3.5% or today 5%. I know what the rate is, but those underlying costs comes on that 2-page disclosure, and there's like 97 numbers on there, right? And only one section makes a difference in the cost. And we had some clients that were doing, for myself personally, we did say, listen, shop the mortgage rate, same interest rate, and it was a $2,000 or $3,000 difference between the top cost and the bottom cost. And like you say, we're not changing people's lives. It's a single. We're not winning the game by saving $1,000, but this is meaningful money. Right. And as a regular person, you think, well, I don't know, I go to this place or that place or the other. If I'm getting 3.5% or 5.5% today, what's the difference? And there is a material difference, and that's financial planning. It's got nothing to do with investments.
Yeah. Second example of something that we're talking about with every client who it was applicable was during COVID, the PPP loans. Mm-hmm. So we have probably quarter of our clients have small businesses, and some of them are really small, and they were really busy with their lives and were not tuned into they're known as PPP loans. I forget at this point what that even meant, but we had a lot of clients that were like, get these, and they're like, what? Oh, go to this bank. We knew how to help them through the process to some degree. And we got a bunch of people PPP loans. Again, it's a single, but it helped them at the time. They were eligible for it. And again, an investment, I've never heard of an investment manager giving anybody that kind of feedback. Right.
Another one just popped into my head as we're talking about this is another prospective client coming in and talking about, well, here's what my plan is and can you help me with this? And it was, well, here's what we're going to do for Social Security when my wife retires and I'm spending this money now. And so one of the questions is, well, listen, one of the things that if you hire us that we would do for you is to figure out, is that the right, and look at those different options. And I, probably the right thing to do is what you're planning, but let's make sure we look at all the options to make sure that you make the right decision for you, right? And so that has zero to do with investments, but that's probably more than a single if there's something that, making a lifetime irrevocable decision about cash flow for the next 30 or 40 years, pretty big deal, I think, right? And what does that have to do with investments? Again, that's a big zero, right? That's financial planning.
Another thing I think that people want to understand is that people who are investment managers a lot of times are active managers. And so they're going out and trying to pick the winners in the stock market, either with mutual funds or in whatever category. We believe that the research that has come down from Nobel Prize winners is that you can't pick the winners, and you're better off just going slow and steady in index funds, or we also use dimensional fund advisors or DFA, and that just put the money in, rebalance it once every year, make it no drama, year after year, is how to get the best returns, not be paying investment managers just to do that.
Right. Yeah. Slow and steady wins a race.
Yeah.
Right. Yeah. I agree with that. One thing that you mentioned in our introduction is this idea of wealth management. Right. I hear, and of course in our world we've heard that a lot. That was a good reaction. Unscripted. I like that. But so let's talk about that a little bit. What, wealth management, financial planning, what's the jargon there?
The marketers, people with marketing backgrounds study our industry extensively and try to figure out what words attract people to different advisors. And I think that advisors who want to fashion themselves as working with wealthy people call themselves wealth managers, but that there's generally no difference. It's more of just a marketing distinction. There's no actual significant difference
between that and financial planning.
Correct.
Right. So investment management versus wealth management, my sense is it came from that. That's two different things, but wealth management, financial planning, that's jargon zone.
Yeah, and it's really more of a marketing distinction. There can be what's called family offices, and that's when you have enough money so that you can hire somebody to manage your whole family's finances. So that is, to me, actual wealth management.
Yeah, that's a little bit different.
But that's a different thing where you hire somebody in your office to do it, and it's truly people that really have a lot of need for that and need for entire family planning. So
as long as we're in the jargon zone, before we wrap up, I want to make sure we hit on that idea of fee-based versus fee-only, because that is definitely deep in the jargon zone on things.
Yeah, exactly. So fee-only came in play with NAFA, or the National Association of Personal Financial Advisors, and they said we want to distinguish people who are fiduciary and working in clients' best interest and not taking commission. Okay, and so they came up with this idea of fee-only. The marketers in the industry, we can call them the dark side, said the people who charge commission said, well, we'll do fee. We like that fee something or other, and so we'll call it fee-based.
Right.
And so fee-based is really you're paying a commission and an extra fee, like you do with fee-only. Yeah. So I have a dim view of fee-based. Hate to tell all the fee-based advisors that.
Well, and to me, it's more that it sounds similar, right? There's traction here, so now we're going to muddy the waters. And just to be real clear on that fee-based and fee-only are two different things. And for me anyway, it's know what you're getting, right? Don't confuse the two. I don't think there's as much of a difference these days, but know what you're talking about, right? Know what you're getting and don't confuse investment management with financial planning. Those are two different things. Don't confuse fee-based with fee-only. Those are two different things. And being informed is power as a consumer. So
with that, I think it's a good time to wrap it up. I'm Bridget Sullivan-Mermel, and I've got a fee-only financial planning practice in Chicago, Illinois.
And I'm John Shear. I have a fee-only financial planning practice in Middleton, Wisconsin. And I want to remind everybody to hit that subscribe button, help other people find this show online and this information. And I also want to say, if you have, I'm interested in knowing what you guys think about this financial planning and the jargon zone and what things you're hearing. And so drop a note in the comments and let's have some dialogue about what's going on. And that might help us for some future episodes to provide more value to you with that. And with that, until next time.
Thanks, John.